you want to hit that one?
Yeah.
All right.
Hello, everyone.
Hi, we're going to be talking here in just a second with you all about home buying process a little bit, or getting started with a great lender, and some things you want to ask lender before you get started. And this is going to be a weekly show that we're going to be doing every Wednesday at about 1:30. So we may be a couple minutes late today, but you know, we're new at this.
And we're going to be live on both Facebook as well as
Instagram. Yeah, and little technical glitch today, but we're going to be live on YouTube here starting next week. So, all right. Why don't we get started? I'm Chris Mincolla with the Mincolla Group at West USA Realty, and I'm with Evan Einhorn.
Yeah, I'm Evan Einhorn, mortgage broker with Modern Home Lending. Very excited to be here today. We got some good stuff to show for you. So,
yeah, I wanted to start off this series, this show that we're doing, with something a little bit extra special for you. First off, wanted to talk about what we'll be doing, and we're going to be doing different things each week. So every Wednesday at 1:30, we're going to be looking at things like interviewing industry partners, different people like contractors, people in the lending industry like Evan, or title, even different contractors for renovations on homes or updates, things like that. We're going to be giving you market updates, and we're going to actually talk about what those updates mean rather than just rattling off a bunch of stats to you. So we're going to be talking a little bit about that and giving you some good information there, so you know it's a good time to buy or sell, or what that means for you and that sort of thing. And we're going to be going behind the scenes on some of the stuff that we do. And we'll also, of course, be giving you some tips and tricks on different things in the industry to know. So it's going to be great, something different every week, kind of on a monthly schedule. So we'll be putting out some more information on that as we go. And today, our topic is going to be Evan Einhorn with Modern Home Lending. Evan just started his own brokerage, so really excited about telling you a little bit about that today. And I'm going to have him start off by explaining that, and then we'll get into some more detail here in just a second. So Evan, tell him a little bit about why you started your own brokerage.
thank you.
And
So
what sets you apart?
Yeah, I'm Evan, Modern Home Lending, and we started our own brokerage for many reasons. First off, to be way more competitive. Second off, more competitive on rates, but also more competitive on fees. We don't charge processing and underwriting fees like a lot of companies do,
Yeah.
and then help save clients a lot of money at closing, because we just consider those junk fees, because honestly, all they're doing is they're going to the mortgage company. They're not going to pay for an actual part of the transaction, like a credit report fee that goes directly to the credit reporting company. Processing and underwriting is going directly to the mortgage company.
Explain a little bit more about what origination and rates. What exactly does that mean, and how much are you saving them?
So, I did a price comparison the other day, and for the exact same rate versus a mortgage banker on a loan just under $300,000, I was almost $9,000 difference. So that's
wow.
So that means that
$9,000. Did you hear that, guys?
I could either cover all their closing costs, or realistically, what that means is we could get you a much lower payment and save you almost $100 a month. And honestly, at the end of the day, a mortgage is a mortgage. You're not. Yeah, it's not a car where you're looking at like, a Hyundai versus a Mercedes or something. A mortgage is a mortgage, and the rate you get is the rate you get. The one thing you do want to shop is definitely service throughout the process. So as long as you have someone that's going to take care of you and close you on time, at the end of the day, you do want to look at rate and fees.
Okay. Great.
But yeah, I started my own company. Lots of options if you're ever looking to purchase, refinance, and then we also have some cool renovation loans that we'll talk about in a future episode.
Okay.
Just to help clients out.
Great. And what's kind of the first step then for people? Just real quick, just kind of a first step.
Yeah. First step, honestly, is just a quick mini application. It's not super long at all. It's either a face-to-face, for about 10-15 minutes. It's an online application, which we can post a link here after, or it's a 5-10 minute call with me.
Okay.
And it's from there, then I can see, hey, here's the loan options that are available. Here's the documentation that we're going to need, and then we'll get you pre-approved and out shopping for homes with Chris.
Awesome. Awesome. Or my beautiful wife, Cynthia, right? The real brains behind the outfit. Yeah. Anyways, I just wanted to go through a few things that I thought would be helpful for all of you that, since we've got Evan here, we're hoping to have him at all our episodes in one way or another, whether it's remotely or in person. But there are usually about 10 different questions you're going to want to ask your lender. These are at least 10 general major questions that you'll want to ask any lender, whether you're going with Evan or not. And Evan, by the way, are you only licensed here in Arizona?
So we're here in Arizona, but it's everywhere in Arizona. So
Okay.
it could be northern Arizona, Tucson, whatnot.
Okay.
All the same kind of stuff. And we also work with a lot of the government grant programs too.
Okay.
But that is all of them, just Arizona. So yeah.
Great. Well, I'll tell you why my wife and I in our group really like working with Evan here a little bit more in just a minute. But first of all, I just want to share with you some questions that you'll want to ask your lender. And eventually, Evan may be licensed in your state here soon with his new brokerage. He just started it. So, and again, you're getting a lot of savings. You'll be able to save money, maybe purchase more house, all those good things with Evan. But one of the first questions that we wanted to kind of touch on was what's the interest rate on a mortgage? So right now, in general, maybe Evan, you could take us through like what different types of loans and what those interest rates may look like, and what determines that interest rate, I guess, too.
So a lot of people don't realize there could be over 30 different factors that impact your rate. There's 10 big ones. The few really, really big ones: credit score, down payment, and loan program, and type of property. A lot of people don't realize if you're buying a condo versus a regular home, that might change. Right now, without going too in depth, I have someone locked at a 3.75 rate, and then I have someone locked at a 5.625. So that just goes to show it varies. But for the most part, for a regular FHA loan, you're looking in the low fours, and then for a conventional loan, you're going to be looking in the mid to high fours. But contact me, and then I can get you an exact, quote with APR and everything for your specific situation, because it does vary a lot.
Okay.
So, but that, obviously, asking interest rate, that's the number one thing you should be concerned about, other than service and everything. And the interest rate, just because you have a lower interest rate doesn't mean you're getting the best deal. So there's a lot of other factors, and I can kind of dive into that later.
Okay. Yeah, we'll go into that in more detail on some of our other shows, so I guess you just have to keep watching. But let me just ask you this real quick. If someone was to put more money down, or looks at an FHA versus a conventional VA, like what can they expect, real quick?
As far as so the more money you have down, typically the better of an interest rate you'll get. The better your credit, the better interest rate you'll get. If you're buying a primary residence, you'll get a better interest rate than if you're buying an investment property, because investment properties are riskier. And then, there's tons of other things that can go into it, like debt to income ratio. It doesn't matter too much, but sometimes the stronger you are income-wise. So larger down payment, better credit scores, more income on a single-family home will get you the best deal. With that being said, loan programs like FHA, they're pretty lenient on credit. So if, the difference between a 640 credit score and an 800 credit score is actually not that big.
Yeah.
So.
But one of the things that I know you probably hear a lot too, and I know I do, is, well, we're going to wait till we talk to the loan officer. And I got to tell you, some of the stuff that he just went over is exactly why you should talk to a loan officer, whether you're going to move this month or 2 years from now. Talk to a loan officer now. Evan will kind of take a whole approach to whether you already own a home or not, you're going to be selling a house or not. We can give you a home evaluation on our end. You can kind of factor that in. and what equity you may be carrying over from that sale. Also, those things like debt to income ratios, credit scores, all that stuff he's going to factor in and map everything out. So whether it's 3 months from now or a year from now, you're going to be ready in the best way possible, not just to get qualified, but get qualified for the best rates.
And that's something we don't even need to run credit. I have multiple conversations every single day with new clients that might be 6 months, a year out, but we want to make sure we're doing the right things to put you in the best situation when you are ready to buy. So
yeah.
Okay, well, what other questions do you have?
And I think we kind of already touched on this a little bit, but what discounts or origination points will I pay? What are origination points?
So we don't charge origination points. We don't charge processing and underwriting fees. With specific programs, there might be an admin fee. There might be a lender origination, but we don't charge that on top. Typically, though, there are discount points available, which basically means if you want to pay extra money, you can get a lower interest rate. I've been recommending this a lot lately if they know they'll be in the home for a while, because interest rates are rising. So if you get a rate today, most likely you won't be able to refinance a few years down the road.
Okay.
Markets change, right. But if you read the news, everyone's expecting rates to go up. But basically, paying a discount point is paying extra fees for a lower payment, and over the years, it'll earn itself back. But I help all my clients decide, is it worth it or is it not worth it?
Okay.
Because it really depends on your personal situation, how long you'll be there, and if anything else is changing over the next several years.
So someone was thinking about buying, but they're like, I may only be here a couple years, or I want to pay off more debt or save more money, but yet they could qualify today. What would your answer be on that? I mean, in general, what kind of approach would you take to answer that?
So, especially if they're renting, buying versus renting, you could look it up. We can post a link to an article in the comments after this. Buying versus renting, again, it depends on your situation, but in the Phoenix area is a great idea, especially if you'll be there for at least a few years, because interest rates are competitive now. Property taxes are cheap here. Now, I'm not saying that is true across the country, though. You
Right.
look at San Francisco, New York,
Yeah.
and you pay a premium to be a homeowner there. But here, the rents are so expensive, I didn't even realize until I looked at it the other day. I'm a homeowner.
Yeah.
And it has gotten crazy where a lot of our clients, we help them buy with little or no money down, and their mortgage is very similar to your rent. So why not own, if you can.
Right. Excuse me. Okay, so great. What are closing costs?
Yeah.
What is that?
Yeah,
A lot of people never even heard of that before.
Yeah, closing costs. I always make sure not to surprise my clients, and we get educated up front of what to expect. But closing costs is, everyone has your down payment, which if you don't have a down payment, we have options for down payment grants. But if you don't, on top of your down payment, there's also all these costs in the deal. So when buying a house, typically there's lender fees, but we don't charge processing or underwriting fees. But the title company, who's the third party that helps you out, you're going to prepay a year of homeowner's insurance, you're going to prepay some taxes, and you're going to prepay some mortgage interest. There might be home warranties, HOA fees. So these all add up, but Chris does a really good job in negotiating the seller to pay these for you.
We make them an offer they can't refuse.
So it's a really win-win situation. Yeah, it's another cost on top of the down payment that I give you a good ballpark of, hey, this is what you can expect, so there's no surprises later, or hey, Chris, this is how much we need, and then Chris gets it done. So.
All right. Well, I am a New York Italian, so I'm sorry. Okay. When can I lock the interest rate, and will it cost me?
Yeah.
So a lot of people had all these crazy loans back during the crash and all that. And are we coming up to another crash now? Right. And all those sorts of things. So
right. What the biggest thing different now versus 10, 12 years ago is I actually need to document income. There's no stated, there's no true stated income loans where you can say, hey, I make $500,000 a year and we're not going to ask for any paperwork. We legally have to ask you for paperwork as part of the
right.
regulations that came in place.
Yeah.
But as far as locking a loan, so let's say you're shopping for a property, a lot of people, if I quote you one thing now, if you find a property a few months from now, the interest rates might be slightly lower, slightly higher. We can lock in your interest rate once we're under contract.
Yeah.
Or on a refinance, after once we have a full application from you, we can lock in the interest rate. And I don't know what the exact stat is, but I'm sure it's something like 97-98% of loans I do are fixed rates. Because for the most part, the difference between a fixed rate and an adjustable rate is not that big. That once we lock in your rate at, let's say it's 4.5, it'll stay 4.5 for, let's say 30 years.
Okay.
So, and I'll always review, interest rates and fixed versus adjustable if anyone wants to know. But for the most part, adjustable rates don't make sense because there's not that big of a difference. So.
Okay.
Yeah.
Is there a prepayment penalty on type of loan that a lot of people are going to be looking at usually?
So I've never had a loan with a prepayment penalty on it. I'm not saying they're not out there, but I've never given a client a mortgage that has a prepayment penalty, which that's nice because again, 10, 12 years ago, those were kind of some of the features that clients were getting adjustable rates with a prepayment penalty. So if you wanted to get out of that adjustable rate into fixed, you'd have to pay a prepayment penalty. So none of the loans I've ever done have had a prepayment penalty, and that will be on your loan estimate too. So you'll be fully aware. But good question to ask because some lenders are starting to come back with that now.
Yeah. Okay. How much do I have to put for the down payment? We talked about closing costs. On the other end of it, how much money do I need up front for the down payment? And is it like immediately when I go to buy the house, or how does that all work?
Yeah, no, that's a good question. So typically there's a deposit once you find a house and you go under contract with Chris. So once Chris negotiates and you guys agree on a price, there's a deposit. Depending on your price point, that could be anywhere from $1,000 to several $1,000s, but that gets put towards your down payment. And then typically the down payment's required at the end of escrow. Down payments for first-time home buyers on conventional is 3%. Down payments for FHA borrowers is 3.5% for everyone. So that's the down payments. However, we do have 5 different programs to help you with your down payment. So if you don't have, even if you don't have 4, 5, 6, 7 grand saved up, I've helped clients get into homes where they get their full deposit back.
Okay, right.
So it is kind of crazy. Yeah. I know it sounds too good to be true, but I'll help you analyze. Hey, is it worth it to put a down payment? Or is it worth it to go with a grant? And I'll let you know what the pros and cons are, because to get your down payment covered is kind of nice.
To get the grant, and kind of just to backtrack real quick, to get the grant, it sounds like that might require a ton of work or paperwork and stuff.
Yep.
And to kind of back up just a minute, one of the things that seems to be a holdup for some people is getting all their documentation over to you.
Mm-hmm.
What is Modern Home Lending doing differently to get the documentation easily and maybe different than other lenders? And what can people do to kind of streamline that process and get it done? Because again, the reason why he needs the paperwork is to prove the income, verification of employment, all of, did you file taxes or not, all those sorts of things, right? So,
right. Unfortunately, I can't take your word. I would love to, but I just can't take your word.
It's not 2002?
No. But no, that's a good question. As far as documentation goes, you can always meet me. We can, you can scan an email to me. You can fax it to me. But what we're doing above and beyond is we have a nice portal online, which is a great way for us to keep track and for you to know, hey, I know I sent Evan pay stubs, but I know he needed a couple more things, W-2s and bank statements. I forgot what I need. So it's 24/7 live. You can always check what we need from you. But in the portal, you can upload it. You can take a picture through your phone. So I know a lot of people aren't on their laptops, but you're on your phone all day. So that's kind of convenient. And then the third option, if anyone uses something like TurboTax, is you can link it with your bank account or with your payroll. So if you work at a big company that has a big payroll company, you can just log in and it'll pull your W-2s, pull your pay stubs. If you have one of the big banks like Bank of America, Wells Fargo, Chase, you can log in and it'll pull your last 2 months' bank statements. And I've had clients get me their documentation, all their documentation that they need for the loan in under 60 seconds, which is...
Yeah, we actually had one like that. I remember you
telling me
with your new system, you were like, oh, we just used it, and it was like,
honestly,
done.
They took a picture of their driver's license, signed into their bank account, and signed into their payroll, and then they were good.
And other companies have things that are similar, but not quite as...
I like this because it's mobile friendly, which again, like I said, everyone's on their phones all days, and unless you work on a computer all day, you're probably not happy on your laptop or desktop.
Yeah.
And not even everyone has desktops.
A lot of our clients only have mobile devices.
Right.
Yeah. So
we want to make it friendly to everyone, no matter if you had a computer or not had a computer. And again, we can always meet to go over paperwork as well.
Okay. Awesome. What you kind of touched on this, but real quick, what are some of the general qualifying guidelines? Like, what's the minimum credit score? And if I don't have it, do I want to just turn this off now and stop talking about it, or what should I do?
Yeah. So I like to categorize qualifying into 3 different categories. You need income. You need some way how to pay your mortgage, because I don't know why you'd be getting a mortgage, but we need some way to document income, and there's different guidelines for if you're self-employed or employed or retired. So we'll look at that. So income's the first one. You need credit. So we'll look at credit. But with that being said, we do have loans for people with no credit scores. So, there's always an option, whether it's going to be the best option. I can help you compare. It might be the only option, but at the same time, it might get you the home, and that still might be way cheaper than renting.
Right.
So we have income, we have credit, and then we need, a down payment. So assets. But again, like we discussed, there are grants that you can qualify for that will cover your entire down payment, and that's where I come in, because you don't need to apply with any separate entity. I will help you through the entire application process. Sometimes there's an online class required, but I'll give you the link for that, and you can do it on a weekend, Saturday.
A class? Do I get tested on that?
I won't test you, no. Not at all.
Okay.
So really, income, credit, and down payment, or one of the down payment programs, and that's where I can help you and say, hey, you have income and credit, you're having issues with down payment, let's help you get that covered.
Okay.
So, yeah.
Awesome. Before I go any further, I just want to say thanks for joining us, Natalie, one of our clients, Rudy. All right, you guys are in there. And if you guys have any questions, jump in, give us those questions. And as we're going along here, again, we're talking with Evan Einhorn with Modern Home Lending. We're going to be doing a live broadcast on different subjects every Wednesday at about 1:30. We're going to be definitely going live on Facebook. We tried to do that on YouTube today. We're going to have a video going out later, but anyway, we'll have that all worked out over the next couple of weeks. But every Wednesday at 1:30 we'll be here, one way or another. Definitely on Facebook Live. All right. So Evan, what documents exactly is someone going to need to gather up, and what can they expect? Like, how long is that good for once you run it?
Yeah, so that's a good question, and kind of like the rate question, it's not one size fits all. So I always say once I get, have an initial conversation, 5 to 10 minutes, I'll give you an exact list for your situation. But for your typical borrower, you're looking at driver's license, you're looking at your last 2 years of W-2s, you're looking at 30 days of pay stubs, and then you're looking at least 1 month of bank statement. Other than that, it might vary if you're retired or self-employed, or let's say you had a foreclosure 3 years ago, which is actually not that bad with FHA. All that kind of documentation, but for the most part, pay stubs, W-2s, bank statements, and driver's license, that's over half my files, and that's pretty much all the documentation we'll need.
Okay, that's pretty simple. I mean, people should be able to pull that up.
Yeah.
What if they have any trouble? I don't know where my W-2 is. What do you do then?
Yeah, so we can, we have ways to work around that. We can order it from the IRS. So W-2s is a big one that not a lot of people have. But we try to make it as easy as possible. A lot of people ask for tax returns, which we sometimes need, but I would say we only need tax returns about 25% of the time. And I know the tax returns are probably the thickest thing in your file that you're going to be sending someone. So unless we need it, I won't ask you for it, because it's not hard to get a mortgage nowadays. We just have to document everything, and the less documentation I can ask you for, the better.
Okay.
Yeah.
And once you do it, how long does it take to find out where I'm at?
So honestly, if you're super quick with documentation, it's a 5-10 minute phone call with me. You can expect a very in-depth email from me within a day. And as long as you get that documentation to me, you can be out with Chris shopping for homes in less than 24 hours easily.
This weekend. This weekend. No money down. Don't have the money? No problem. All right. By the way, you do need the earnest deposit. anything that's under luxury market, figure on $1,000 for the earnest and about another $1,000 for your inspection and appraisal, give or take a little bit, depending on the size of the home. Does it have a pool and all that? And we'll talk about those other items as we go along here with some of our other videos. So what might hold up approval of my loan? I know, we've had those from time to time, but it's not necessarily always, or what people may think, right? On the hold up.
Right. So mortgages are delayed for many reasons. Sometimes it is the lender, but that's where personally I do a good job, and that's why I ask you for the documentation up front so that we know we have a deal. But lots of things that can hold up a loan. Let's say you let's say you don't even get a car loan, but let's say you apply, you stop by the dealership, you're interested in getting a new car, you wait till, you're going to wait till after you buy your home to get that car, but even just running your credit or increasing, balances on your credit cards, switching jobs mid-process. I'm not saying these things can't happen, but you definitely want to work with your loan officer just to make sure you're ahead of the game. And being proactive, so it's not an issue at the last minute, and then all of a sudden you have a delay.
Yeah.
So.
Yeah, Evan. If you go along with what Evan maps out for you, we've never had a case. Now we've had people who give incorrect information. It's not always anything malicious. They just can't remember, don't have the correct information, or thought it was different. But that's why it's so important to have that documentation so that we can make sure that those things don't happen. And then, obviously, if you're buying a new car, that's going to be a problem in the middle of the process, like Evan said. So,
and again, I literally just had that on a deal happen where they were leasing a car, and then all of a sudden they leased a slightly more expensive car. Thankfully, we caught it in time. There was actually no delays, but the more you can loop me in on it, the better, because you can give me a call and be like, hey, I'm thinking about getting a car, and I might say, hey, as long as it's below a $500 payment, you're fine, but this is the documentation we'll need.
Right.
So I can at least walk you through it, and we can be working as a team versus me being the bad guy, calling you out later, and me being the bad guy, postponing closing. So.
And, we'll talk about this more later on in other segments too, but it's really important to have the documentation up front to get the approval up front, so we have a letter from Evan saying, this is how much you're approved for, because we can write an offer all day long, but without loan approval or proof of funds if you're paying cash, they're going to be like, well, how are you paying for this house? On the other side, and the seller's not going to accept your offer. And the stronger your offer looks, in other words, the more documentation you have to Evan, the more money you're putting into the earnest deposit, and all those sorts of things, the stronger you look to the seller and the more we can negotiate and make them that offer they can't refuse,
right.
Especially for closing costs and stuff like that.
And Chris and Cindy do a really good job too, because having a good realtor on your side, selling you to the sellers and listing agents, a professional realtor that they know is going to help make the deal smooth, is very, very impactful on the deal.
Yeah, it doesn't cost you anything to work with us on the buyer side. Please don't go directly to listing agents unless I'm the listing agent. No, I'm just kidding. Anyways, I'm just kidding. So with that, I wanted to just tell you real quick why we like working with Evan, besides the fact that he's very informative and very patient with our clients. As long as the client has done his due diligence throughout the process, which, getting him documentation as he goes along, every lender will be checking things right up until we close, not just Evan, but that's just part of the regulations and process that's in place as far as making sure you're still employed and all the credit and things are still there, and you haven't gone out and bought that car. We like working with Evan because on the front end, he'll make sure everything's there that needs to be there, and also he'll close on time and do everything that he's supposed to be doing, unless, of course, there's some sort of issue that comes up that's out of his control, like we already talked about.
If that happens, that's where we loop everyone in and say, hey, you know what, we have an inspection issue or we have an appraisal issue, let's reevaluate closing.
Right. Yeah, and we can come up with solutions when those things happen. One way or another, we'll solve those issues. We'll overcome that. The other reason why Evan is heads above, besides the fact that he's not charging those lender fees, is Evan. One of the things that impressed us about Evan was whether he does the loan or not, and usually he's able to do the loan himself in-house because he has a lot of different products that most other lenders are not going to have. They're not even certified for. Their company may not even carry it, or they're not going to make much money on it, like a down payment assistance program. So they're going to do everything they can to convince you that because of that extra 1/4 or 0.5% to go on and wait 6 months or a year to save that down payment. And by that time, you haven't outpaced inflation, the interest rate, the home price is going up, for instance. I mean, just in the last 2 months, our average price in the valley has gone up about $16,000, just in the last 2 months. So just to kind of give you an idea, it's hard to outpace that if you're saying, oh, I'm going to save more money, or I'm going to wait, because I'm going to try and do this or that. Sometimes that is good, and sometimes you have to, but Evan will help you weigh those things out, but he'll make sure you're in the best loan that's for you, even if that means he has to broker it out to another specific,
and
lender.
There's lots of options out there. So
yeah,
you might hear conventional, FHA, VA,
yeah.
But unconventional, what type of mortgage insurance do you have?
Right.
How much is that? So a lot of people don't realize you can even shop for mortgage insurance.
Real quick, what is mortgage insurance, and
Yeah.
why do I care?
Yeah. So typically that's required if you're putting less than 20% down. But if you're below certain income thresholds, if you're putting certain amount of money down, it's based on credit score. And it varies based on the loan program. But that's one thing where, you might be putting 5% down and being like, well, this is my interest rate, but you might be getting the most expensive mortgage insurance out there, and you might just be thinking it's the same with every single lender. Well, it's not. I can help you compare and show you that lender A versus lender B, you're going to be paying $30 more in mortgage insurance, and that's just because you're going with lender A. So. And
that insurance is to insure in case I default on a loan.
Yeah. So it doesn't. Unfortunately, it doesn't. Protect the buyer at all. It really is because you're putting down a low down payment, so you are a riskier borrower. So I can help you analyze which mortgage insurance option makes sense for you, because I think so many people just go with the standard monthly mortgage insurance and pay the most expensive rate. So. And
that's different than your homeowner's insurance. Just to clarify that. So anyways, real quick, I just wanted to introduce you to one of our newest members here with the Mincolla Group. If you can fit him in here. Let's see. Hey. James Moss. He's with our group now at the Mincolla Group, West USA Realty. Just want to welcome him aboard. We'll be interviewing him in a couple weeks, so stay tuned. Every Wednesday at 1:30, we'll be coming at you, unless it's like Christmas or something. We may say Merry Christmas to you or something like that. But other than that, we'll be here every Wednesday at 1:30, Facebook Live, and should be on YouTube next week, also going live, and probably Instagram too. So, anything else, Evan, you wanted to share?
No, just appreciate you guys joining us. You can always give me a call at 602-456-2273. Again, 602-456-2273. Chris always has my info, so you can private message him on Facebook, Instagram, whatever, and he'll get us connected. And then our website's modernhomelending.com. But like I said,
can they apply online there?
They can apply online there, and it's quick, simple, and I'm always willing to have a conversation. Like, we're here to help. We're not here to try to sell you on anything that doesn't make sense. I'm here to make sure you're in the best loan, and you're doing what's right.
That's why he started his own brokerage, by the way. So, right?
Yeah.
So, and you can always, again, Evan, 602-456-2273, modernhomelending.com. And we're at 480-788-8569. And we're with MincollaGroup.com or MincollaHomes.com. So we'll see you next time. Thank you so much for joining us.
Thanks, guys. So quiet.